Welcome back to the Cobra Trading Channel, everyone, where we focus on people, passion, and platforms. I'm Alex Bustos, and today we're going to be talking about two specific orders: stop orders and range orders. So you're in a trade and you get a call, and all of a sudden you have to go pick up your daughter, your son from school. Or maybe you forgot that you need to go pick up groceries because you have a scheduled appointment pickup time. But you're in a trade. What do? Do you just walk away and hope for the best? Well, if you do that, then you're probably going to come back to a big headache and a lot of stress. Well, stop orders and range orders combined can help you with this stress. So let's talk about the stop order first. Let's say you're in a trade and you're thinking big picture. You're thinking, I don't think this trade should go against me. And there's a certain point in the trade that if it gets to this price, I need to get out no matter what. But other than that, you want to hold pretty much all day and you want to ride the trend. If that's the case, you can just use a stop order. What is a stop order though? A stop order is an order that is set at a specific price that if triggered will execute your trade. So in other words, if you are in a stock at $2 a share and you have a stop order at $1 a share, that means when the stock hits $1, it will execute your trade to sell. Now there's two types of stop orders. There's a stop limit and a stop market. Now a stop limit is just what it is, where you put a stop price of $1 and then you can put a limit price to sell no lower than 98 cents. So it can help you with some kind of slippage. You can manage it. With a stop market, you're just saying if it hits $1, just get me out no matter what. I don't care what price, as long as you get me out quickly. Now, depending on what your plan is and what your risk parameters are, you can decide which one's valuable for you. Now, a range order, what is this? This is something that I love to use because you can actually set a stop and a profit target. So in other words, if I'm in a trade and I get a call and all of a sudden I forgot about an appointment, but I don't want to walk away because I'm in a great setup. I've been waiting for this all day. I've been trying to make money in this trade. I'm going to set a range order, which means I'm going to say I'm in the stock at $2 a share and I want to get out if it gets at $1 a share, but I want to take profits at $3 a share. So I set my range order for a stop at $1 and a profit target of $3, and then whichever gets hit first gets executed and the other is canceled. So therefore I can clearly just walk away and let my plan pan out. And then when I come back to my desk, maybe it's been executed, maybe not, and then I can take full control. But here's another thing. If you're probably already thinking in your brain, I can use this to help me stick with my plan. Absolutely. These orders I use all the time to help me stick with my plan, because you know how you can get shaken out in a trade because you're watching every tick. And if that happens to you, you might want to consider one of these orders and let your trade pan out. If you're liking this content, be sure to hit that like, subscribe, and the bell so you're notified for future content. Thanks.